And sticking with chips, Supermicro also in the red, plummeting this morning after weak fourth quarter results and soft guidance. Those shares down more than 18% right now. Let's get to Kristina Partsinevelos with more on Supermicro. Kristina.
Thanks, Leslie. Well, the AI server assembler really is caught in the classic growth trap. They're trying to scale production to meet AI server demand, but they're just burning through cash and sacrificing margins in the process. Supermicro CEO Charles Liang admitted on the earnings call they lacked working capital to expand as quickly as needed, which is why they had to issue a $2.3 billion convertible bond offering just in June. The margins really tell this story and why you're seeing the stock down so much. They collapsed from 18% at the end of 2022 to under just 10% right now. That's what happens, though, when you're assembling expensive AI components, but you have to compete primarily on price against big players like Dell and HP Enterprise. Mizuho points to customer concentration as a risk. There's about 4 customers who contribute over 50% of revenues. One of them is just massive. The bull case, though, hinges on their technical advantages. They're typically first to market with new AI server configurations, and their liquid cooling technology becomes more valuable as NVIDIA rolls out more powerful chips because you got to cool them down. But they need to prove they can translate technical leadership into sustainable profitability and not always have to wait on NVIDIA to deliver their next set of chips. That was a major complaint for this quarter as well. Supermicro, though, is riding one of the biggest infrastructure buildouts in tech history. But investors just are learning that being a picks and shovels play doesn't guarantee a gold rush profit when everyone else like Dell and HP are selling shovels too. Guys?
Kristina, I wonder what you made of the interview with Lisa Su over at AMD. They're still a little reticent to put any numbers on these China shipments if and when they begin.
Yes, that was a major concern for the upcoming quarter. But if I were to point out, NVIDIA spoke to analysts after the United States said they were going to be putting these export controls and allowing those chips to be sent. And NVIDIA said that you wouldn't actually see it until Q3, if at best Q4. Why? Because these licenses take a long time to get in place. There's paperwork. And so for AMD's case, just especially in Lisa Su's interview today, as well as on the earnings call yesterday, she was very unsure as to where they stood with those licenses. I'm paraphrasing. But that was the takeaway from a lot of Wall Street, and which is why you can't really price it in. But we knew this. So the negative reaction to the stock shouldn't be contingent on the AMD chips going to China. There's the drivers, the GPU they said they're going to be ramping into this year and to next year. They have next iterations. She called out NVIDIA specifically, saying that their chips compare to NVIDIA's Blackwell 200 when it comes to inferencing. So I don't know if we really need to pay as much attention to China for this downward trend on the stock right now.
Right. Kristina, thanks. Talk soon. Kristina Partsinevelos, busy day for semis.